Okay, good afternoon. Happy Friday. Today is May 26th, Friday, weekend before Memorial Weekend. The market's closed. It's about 2 o'clock Pacific time. This will be your weekly take on the market. My name is Scott St. Clair. I'll be the host. I am the manager of the Premium Product Group here at Investors Business Daily. Let's take a moment, please, to read the disclaimer. I'm not licensed. I can't make buy, sell, hold decisions. Anything we say is for educational purposes only. Okay, thank you. Market thoughts, industry groups, stocks to watch, and the quote of the week. And so I don't have any screenshots this week. I didn't have anything that kind of jumped out at me that I felt like sharing. So let's just jump right into the indexes. And we'll start with the best index, resume share, and that's the NASDAQ. So if this, I don't know if I talked about this on IB Live or if I talked about it on the videos. Apologize. Sometimes they run together for me. But if imagine you were on an island and this is the only thing you could trade, would you be long, neutral, or short this? I think it would be pretty obvious if you're a trend follower, if you follow our system. If now, and also I feel like if you fast forward 10 years from now and you give me this chart and you don't tell me what day, what time of what time frame it's in, when this occurred, but you just tell me this was an index and I traded in this environment. What do you think your exposure would be? Would you be using margin? Would you be, pedal to metal? Would you be in short? And, I think I'd probably say I would be slightly, if not medium margin. And so it's kind of a weird environment because I'm not using much margin just yet. I'm starting to get there. And in my cash accounts, I actually had to do some selling of my bond positions because I wanted to add to a stock. And so, it is a little bit short-term extended. And maybe you have this whole, debt ceiling issue, which is to me not a non-issue. There's no reason in the world they're going to default on the debt. At least I don't think so. I mean, let's find out if I'm wrong. But when you can make your own money, I don't see the point. And so you could get a little bit of buy the rumor, sell the news on that effect. That's possible. But I just think it is what it is. The price is very strong. And it feels a little bit, I don't know who coined the term a lockout rally. It feels a little bit like the institutions and or retail investors are locked out. They don't own that much of the best merchandise, and they're starting to feel like they want in. And how long that can go on for? Maybe it can go on for a while, I would think. So I don't know if you want to term it a bull market, a bear market rally, a counter turn rally. I think I don't like to get into all of that. I just don't think it's very valuable. I guess I would say, are we in an uptrend? And, depending on your time frame, short term for sure, intermediate term, I think the answer is a strong yes. Long term, I don't know. You might say that no, but I would say long term, yes. I mean, here's the 40-week moving average, and we're above that, and it's starting to go sideways. And if the market just holds here, this will start to turn up. I think this is your best indicator of, really, if I was only allowed to see one thing, and I had to say whether it's a bull or bear market, I would say, okay, well, is the index above or below the 40-week moving average? And that would yes or no, then yes, bull market, no, bear market. And it's, quick here, but look how well it times the, the 2022 bear market. You're 1, 2, 3, about 6 weeks off the top. And, if you go back and study history, if we go to the '09 or the bear market before that, you see, this would have been tough for sure. A little false signal, closed below that, came below it, but closed above it or right on it. But this is a hard break. Tries to rally above, can't. Tries to rally above, can't. Waterfall. Kind of your third leg down. And then in May of 2009, you get a strong close above it. A couple months after the follow through day, but not late. Imagine you were doing buying in May of 2009. How much runway you had at that point. So that's kind of how I see the market. I listen to a lot of podcasts, or let's say this: I follow a lot of podcasts, I follow a lot of Substacks, follow a lot of people on Twitter. I don't listen to all the podcasts, but I always look at the header. Who's the guest? What does the guest think? And just my 2 cents. It just feels like a lot of people don't believe in this market, and I was kind of in that camp for a while too. It just seems like it was getting more and more narrow, but like the light bulb went on for me a few weeks ago that it's getting more and more narrow, but everybody sees how narrow it is, and therefore that can't be a good signal that the market's in bad shape. It's kind of how I feel about it. So I think the market's more than fine. It is narrow. There's not a lot of places to be. We'll talk about some stocks, but man, there are some great stocks. There's some stuff that I'm sure a lot of us wish we owned. And if you do own some of these names, you're trying to figure out, gosh, do I hold on to them? Do I try to lock in these gains? They're so strong. Do I, I'm kind of in that camp. It's like, I don't know. It's weird for a couple of the names. Let's go to the S&P. Not as strong as the NASDAQ, but again, it's above the moving averages. Go to the weekly, above the 40 week, and has been for a number of weeks. The Russell. So, you've got a little divergence here. The Russell is not good, not acting well. I guess the word on the street is because of the bank exposure, right? That's pretty much what everybody talks about. And then overseas, there are some really good looking stuff. And then there's China, doesn't look all that great, but I think I don't know if I pulled up VPL, Pacific, Vanguard Pacific. You had a little shakeout, but this looks okay. It doesn't look terrible. And Japan is hitting, 30-year plus highs. This is hedged with the currency, but if we go to EWJ, let me see. I think I have the best. Now the topics is, I think it was the topics index, which I read was hitting 30+ year highs, but off the lows a little bit. So I think overseas is there's some places you can consider if you even need to do that, but there's plenty to own, right here in our backyard. So I don't have a lot about the indexes. I know they're narrow. Everybody knows they're narrow. I know it's dominated by the NASDAQ. Everybody knows it's dominated by the NASDAQ. If you have sell rules, I think you're fine. You have an out if it goes bad. If you don't have sell rules, I could see where it would get a little tricky. You'd be a little nervous. Like if every time you bought something you never sold it, I'd be a little hesitant to put stuff on all the time. I would see why that would happen. But with sell rules, I know that if it goes bad, I have an out. I can change my mind. Okay, let's go to the industry groups. Let me pull this up. Software education is 1, computer hardware equipment is 2, building residential commercial is still holding up pretty good. Let me write down, we'll look at a couple of home builders. I haven't looked at those. That's a trade that I flat out missed, so I haven't looked at those in a while. MTH, I think Green Brick looked really good last I saw. Internet content, computer software database, restaurants, beverages, non-alcoholic. You'd think that you would see, okay, so semiconductor equipment went from 30 to 17. Where else is semiconductor fabless, 33 to 25. This seems to be where all the smoke is, right? The big moves, and there's been a few, are in those two areas. And I like that area because I don't know what it is about that business, but historically they've always had great earnings and sales, and there's just seems like there's been a go-to name almost always in every cycle. One of my biggest winners when I first started out with was C-Cube Microsystems, and so I kind of have a soft spot in my heart for semiconductor stocks. All right, so I just don't see a lot with the industry groups. It's pretty diverse, so there's plenty to look at. And so maybe the market is starting to get a little broader. I think it was Ed Carson said on the Slack channel today, the market breadth was very good today. I can't confirm or deny that, but I did see somebody else, a guy that I follow on Twitter, who's kind of caught this market uptrend pretty well. You know, he's been bullish because everybody's bearish type of guy, and he said that the breadth was improving. And so, what if you're bearish and you're bearish because the breadth is bad? What's going to happen if the breadth starts to improve? Then what? So then I guess it's good. You'll find a few more names, but the best names will probably have sort of started their move already. All right, so stocks to watch. This is the big one. There's so much to look at, and we'll end with the number one stock in the universe. But let's look at ServiceNow. Broke out of this cup with handle. They've got pretty good earnings and sales, acting really well. ASML. So, it breaks out. Nice shakeout, but you didn't get stopped out. But or you might say, remember, this is pattern rec. So maybe in the old days, I might have thought, let's turn off the pattern rec. Without pattern rec, I might say that's a cup of handle, although it is only 1, 2, 3, 4 days. But either way, that was the day you could have bought it on the Nvidia news. But acting, how about the weekly? Looks really good. And I've talked about this, right? And I like this name because why? Well, it has all the CANSOM characteristics: return on equity, proprietary ratings, earnings and sales, sponsorship. So there's stuff to buy. If not one name, for sure. There's stuff out there. Palo Alto, I think, tried to break out, although I think the pattern probably something like that. And it was on the earnings day, but earnings were up 83%. And I've talked about this area with Fortinet and Palo Alto and even CrowdStrike. It's like that second tier of technology stocks with market caps that aren't so gigantic, right? If the market broadens out, they're gonna go down a level from the Nvidias and Apples of the world. That doesn't mean they go down. Maybe they just stop going up. And you've got these types of names. That's a possibility. Okta, I think, is acting okay. I don't like it as much as the others, but there's nothing wrong with that one. And CrowdStrike, no real buy point. It kind of makes CrowdStrike tough. I guess it probably should have been bought right there. Let's see what pattern rec thinks. Not long enough to be a base, but that's probably like the buy point. But it's below the 200-day. So, but this is a name I really like. At this point, I'm just going to wait for the earnings to see how it reacts. But that's another name. And then today, Marvell. I mean, if this is a bear market, I don't know. I don't know how you would explain this type of action up 32%. Now, if let's say it's what made a ridiculous move up? Is Silvergate even in the index anymore? How about Zoom, and we go back to it's the context of the move, right? So these aren't quite this big of moves, but when the stock goes from 100 to 500, and then it has a really big move up, that might be in the context of how about Carvana? Carvana could be a really good example. I apologize. Yeah, this is a good example. So like Carvana's up 10% here, 4%, and another 1%. So 15% in 3 days right there. Probably this is 15, 4, 5, 5. So that's probably about 20% right there. So in the context of a downtrend, you might see those types of rallies. But after you've kind of built this bottoming base, you can see how it sort of just stopped going down, right? And so this is very powerful action. I actually bought this in the after hours and then sold it for just a couple of points. Don't ask me why. I think I bought it. I know I paid 56 for it and sold it at 58 and 65. Now it's partly because of the makeup of my portfolio was just so heavy in semis. I just got a little nervous. I thought I was getting over my skis a little bit. So that's why I did that. And we'll talk about the Nvidia. So Marvell looks good. I don't know. I don't know if I, run out by that. MU. So I remember I think this is the day it gaps down because, the ban from China on the chips. I bought it that day. Just didn't think it was that, if the news was that bad, why didn't the stock really, really go down? And it kind of goes to that, that saying that I said on IB Live and somebody tweeted for me is, if the stock's supposed to go up and doesn't, it's probably a sell. And if it's supposed to go down and doesn't, it's probably a buy. And sometimes I just trade just instinctually, just based on that kind of observation. If it was really that bad, a ban on China, why is the stock only down 2.85%? Just doesn't seem that like the market is that worried about it. And so that the stock is holding up really well, and it's part of the whole Nvidia thing. If Nvidia is selling all these chips, you got to have memory to have all of these. What else is in? Oh, and AMD is in this group. So just a powerhouse. Again, this is a perfect example, and I messed this one up. One of my colleagues at work has this and is killing it in this one. But here's the earnings release, down 47%, revenue down 9%. Okay. It's a bad day, down 10%. If I was in that stock, I'd probably be out. In fact, I know I'd be out. I would be out of that, no matter where I bought the stock at. But the next day, it goes up. And at one point, it goes up all the way up and covers the entire move down. It's supposed to go down. The earnings came out. They were bad, right? They were bad, allegedly. Why didn't the stock go down? So it didn't go down. Next day, it didn't go down. Next day, no, it didn't go down. It goes up. Well, you want to be a purist? No problem. There's your buy point, 100 and change. And now you're up 24% on it, something like that. Now, these are the best setups, I think. They're hard to find. They're not easy in real time, for sure, but I hunt for these types of things. So AMD, Palo Alto, MU, ASML, ServiceNow, Crowd I talked about. Let's look at a couple of home builders, MTH. So a little tired. The group is a little tired. You see the relative strength is turning down a little bit. GRBK. Wow, really strong actions. It's kind of doing what it's supposed to be doing. If you own it, I don't think it's doing anything wrong. You might have to sit through a little bit of this, but that's powerful action. And I have some thoughts. A lot of people, there was a podcast that I actually listened to, and let me find my notes. This is important. I sent myself, here it is. So going back to the market, I follow a lot of Substacks, and I don't read them all, but I like the headlines. And sometimes if there's something in there that's interesting, I will read it. But one of my friends sent me an email and he said, despite the headwinds, the market sure looks strong. And I found his header kind of ironic. So, despite the headwinds, but what are the headwinds? They're really kind of all the headwinds that we already know. So the debt ceiling, the Fed, I guess there's a couple of other things. So I've just learned that if I know about it, everybody else knows about it, and it's probably already mostly, at worst, mostly in the price. Probably all in the price, but mostly in the price. So, but then another guy on a podcast said, this is a guy that's a veteran. He's been been around the markets forever. He says, the market doesn't make sense. And I love that he said that, because I've said that so many times in my career and thought, bite your tongue. You're not here to understand the market. Ed Seykota, it's not my quote of the week, but Ed Seykota said, a lot of people would rather understand the market than make money. You don't have to understand the market to make money. And once you realize that you're in this to make money, that's your only objective, is to make money, you will trade more freely, trade with a clearer head. I honestly believe you'll do the right thing more often. It doesn't mean you're going to be right more often. You will do the right thing more often, the correct way to trade. So you don't have to understand it. I don't understand it. And I can make the most bearish case ever on the market, and I could make the most bullish case ever on the market. I heard a lot of talk about, this market's bubble. And I know George Soros would say, if I know it's a bubble, I run to it. He runs to it to participate in it. Bubbles go on a lot longer than you think. Believe me, I've lived through a couple of them, and the bubble in the late 90s, I think it was 96, where Greenspan gave his irrational exuberance speech. I would highly recommend you look that up to understand what markets can do. I'm fairly certain it was in December of 96, I believe, but it's his irrational exuberance speech. Here we go. Look it up. I'm not going to look it up here for the sake of brevity, but I know it occurred. I remember I was long the market, and I remember he gave that speech. And I remember the next day or the next week, Monday, coming in or whatever, and thinking, oh my gosh, what's going to happen to the market? And the market did nothing. It really did. I mean, it opened down, of course, but it lasted for a day, maybe a day and a half. And, he was right. There's irrational exuberance. If it was here that he did that at 1,000, it went to 5,000 before it finally mattered. So be careful of all that. This is a bubble. This is that. This is that. If you have a sell rule, I don't think it really matters. And you can participate, and because you're not buying Cisco, thinking that I'm going to buy it here and own it forever. I'm going to buy it here and own it forever. I'm going to buy it here and own it forever. You're going to buy it there. You're going to buy it there. And you might get out. You might get out. You might get out. But eventually, one time you'll get out, and you'll never go back. And some of them come back, but some of them don't. Qualcomm, for example, it came back, but it took forever. In the meantime, this drawdown was, pretty much impossible to hold through. So that talk about it's a bubble, I don't know. It feels like people, if you think it's a bubble, you're obviously not. There's no way you're fully invested, right? So is a lot of people that are I don't know. I don't know if it's the most hated rally in stock market history, but it might be in the top 10 or top 20. It's kind of a weird market. It really is. So it's been hard for sure. It is a weird market, but it's because of that. I think we make it harder, right? Whatever's wrong is wrong with me and not the market. It's one of my affirmations I say in the morning to myself, is to try to keep myself in that mind frame that I don't have to predict the market. I don't, the market's not against me. The market has no idea what my position is. It doesn't care that I'm short. It doesn't care that I'm long. It doesn't even know I exist. So you have to have that kind of mindset that if something is wrong, it's wrong with me, not the market. So let's get to Nvidia, which is the elephant or the 800-pound gorilla. This is really fascinating, this stock, and it's going to be a great story. I'm curious how it plays out. I guess I should have pulled that chart, but I saw a chart. This is not a short squeeze in Nvidia. The short interest in Nvidia is like the lowest it's been in years. So it's not a short squeeze. Obviously, there's some people who are short it, but like the guy that on the podcast, he had Nvidia puts, but it's not a short squeeze. This is kind of a bit of a FOMO move. And the numbers, let's be honest, just surprised the heck out of the street. Nobody was ready for that type of guidance. They're all caught off guard. Even the ARK, Kathy Wood at ARK, doesn't have a position, and she's been a big proponent of this whole AI area, and Nvidia's the pick and shovel company. So everybody kind of just got caught off guard, and that's why it gapped up so much. And I've been doing a lot of studying on it because I was long it, and in the after hours when I saw it up that much, I sold it because that's just kind of what I do. If it's, I like to ring the cash register, and sometimes it hurts me and sometimes it helps me. But then I started to dig in and say, all right, now what? Am I just going to move on, or am I going to find a way to get back in, or what? So let's go to the intraday chart. Let's break this up a little bit. So I think in the after hours, it was like, it almost hit like 400 in the after hours. So I think 398 or something. And then it was 368, 367, and 366 was the low. And I almost bottom ticked the stock from a contrarian standpoint. And when it was down 30, I slacked all my colleagues at IB Live and said, I sold Nvidia 30 points ago, right? I wanted to, look at me, look how smart I was. So silly. It's a perfect contrarian indicator, even for myself. That was the low. As soon as I, felt like, I'd got it right, that was the low. And then it came all the way back pretty much. And so I started to think, well, maybe I've made a mistake, because this happens a lot. And so if it had done this and kept doing that, then it would look, pretty bearish. You've made a big move, you gap up, and you get like something like that, that'd be pretty bearish, but you didn't. So it's held the gains really well. And now I'm back to like full, like pedal to the metal position. And I've, bought it back over the last, couple of days, slowly but surely. I've been just like pecking at it with orders. And one guy that I really admire, and he said, he was interviewed, and he said, based on the guidance, this stock's actually cheap. And he was on very few people are saying that. Most people are saying that it's overvalued, it's a bubble. They put on more market cap in one day than half the S&P stocks are. And it's just a lot of, not that it's negative, but a lot of talk on why this type of move is unsustainable. And from a contrarian standpoint, because I kind of have this little contrarian pinch to me, I think that means it's going a lot higher because nobody believes in it. Most don't believe in it. The short interest it's not a short interest thing. It's not a meme stock. It's not Best Buy or Tesla at one point. This, for lack of a better term, feels like really buying, like that fund manager said, that's being revalued and it's actually not that expensive. I don't know. It's above my pay grade for that. I'm a good, really good. What I do really well is I'm willing to take risk, and I'm willing to admit when I'm wrong. So I'm going to take a lot of risk with this one. And so I don't own like ASML anymore or some of those others because I need the buying power. And to me, if the market gets in trouble and you own MU, ASML, Marvel, Nvidia, they're all going to go down pretty much the same. So it makes it a lot easier to just have one position to manage, and versus five stocks that are all going to go down 10%, or one stock that's going to go down 10%. If I'm wrong, the money loss to be exactly the same. But if I'm right, I think this one it's more liquid. If something goes bad, I know I can get my stop pretty much, versus, maybe an ASML, which does trade overseas, or a Marvel, probably a little bit, going to be a little bit harder as far as liquidity. So if it's a bubble, and that's the other talk that I heard, that it's a bubble, let's go back and study, and I encourage you guys to do this. Go back and study bubbles. So Qualcomm is a great example of a quote unquote bubble. All right. So if we go back to 1999, and the stock broke out around, what's the pivot here? 30, and ran up fourfold and then pulled back. So that looks pretty high, right? Came back, touched the 10-week line. I was trying to find if it ever like gapped up big on earnings, something like that. So stock was up 38% that day. So this is a good example. So it's already gone from 30 to 88. So it's almost tripled, a lot like Nvidia. It's almost tripled. And then it gaps up 38% in one day. And so you get another 20% on top of that before you get pretty significant correction, 119 down to 86. That would be really hard to hold through, for sure. That's 27%. But then it rights itself and keeps going. So let's fast forward to 2000. Yeah, maybe a little bit less. I want to try to capture this day, 12/20/1999. So I believe that was an upgrade of the stock with a price target that went from like 500 to 1,000 or something like that. And so now that's climactic, right? You've got 30 to 500, really crazy. And I'll be honest with you, that's climactic too. If you had sold into that, I wouldn't blame you at all. I'd say that's climactic for sure. And for half a minute, you were right. It went from 405 to 328. I think you'd want to avoid that. One, psychologically, but two, if it is the climax top, you don't want to be there, because once they've topped, they've topped. But then you might have to get yourself back into something like this. But now that's where it just gets crazy climactic. So I don't know, right or wrong, that's kind of what I'm looking for. Fast forward 2, 3, 4 months from now, and you get, maybe it's an earnings release, or maybe it's some type of analyst upgrade where they just throw in the towel and say, you know, our price target is too small, and you get a day like the stock was up 30% on this day as well. So there's a kind of a little bit different between that 30% and that one that we see. You can't even see it now. It's so small. I think it was somewhere in there. I can't remember where it was, but it's a little bit different, right? You look at the trend line, and if we go to the weekly, you know, you've got an upper trend line like that. So that's the difference. This 30%, I think, I don't remember where it was, somewhere in here versus this 30%. Anyways, so Qualcomm's a good one to study. You know, Cisco never really got climactic, but it went a long way. You could study that one. And if you're in Nvidia, then, you know, try to build a plan to maybe capture a big move. To me, it's like there's potential for a really big, crazy move. I don't know what the odds are, but the potential is there for a really big, strong move. But it's not, they're not 100% for sure. And if I'm wrong, well, stock will do this, right? How will I know I'm wrong? Well, stock go down. Be real easy. Well, it'll be plain as day. Might not be easy for me to get out, but it'd be plain as day that something's wrong. The stock will stop going down, or stop going up and start going down. If you're not in it, then, you know, you're waiting for something like Qualcomm did, where you had that like 27% correction back to the 10-week line or the 50-day. And so that will be your kind of your opportunity for a risk reward trade. But you're gonna have to be patient. That's gonna be hard to do. That's the hardest part, because it might be, you know, 3 or 4 months from now or something like that. So it's gonna be very interesting. This is kind of the stock I was waiting for. The earnings, I was curious how the market would vote, and it was a stampede. And I just think you want to give that the benefit of the doubt. And then, you know, for some of you that like to hold forever, you know, I hear stories from people. I still own Apple. I still own Home Depot. You know, those are rare, but they're out there. I wish I was able to do that. I'm unfortunately, I don't have the makeup psychologically to do that. It's kind of weird though, because I've owned my house for 20 some years. I've been married for 25 years almost. So I can commit to something that's good. But I just think it's the stock market, the fact that the price changes every day and is so liquid. It's my Achilles heel, unfortunately. Honestly, if my house traded like that, I probably would have bought and sold it 10 times already in the last 20 years. So that's really the issue, unfortunately, for me, which is why I like to step away, turn the quotes off and stuff like that. I'm trying to get better at it. It's a process. So that's the story with Nvidia. Let's get to I think that's it for the stocks. And let's go to the quote of the week. Joel Greenblatt, who had amazing track record running money. For most investors, the best strategy is not the one that will give you the highest returns, but a good one you can stick to through difficult times. This is very important. So I know what I'm supposed to do all the time. That's easy. Execution is one of the most important words out there in the trading game. So sometimes I mess up the execution. So my strategy is one of trying to just generate an equity curve that, you know, goes up like this from left to right, you know, higher highs, lower lows. That's the strategy that works best for me. Now, Warren Buffett will tell you that what he says is we prefer a lumpy 15% return to a smooth 12% return. And so he's willing to make 25% one year and lose 5 the next, then make 17 and lose 1, and make 40 and lose 22. And in the end, he's made 15%, but it's been, a little jagged. And I find for me, I just don't do well through those emotional downturns when my equity curve is drawing down. So I'm in the camp that I prefer a smoother return. And he's probably right. I think there's been periods, like in 2017, I can remember where I was taking stocks off and they were continuing to go up and up and up, and it hurt my returns. And in 2020, even though I did, it's amazing. If you had told me you're going to make X amount in 2020, I would have been like, yeah, give it to me. Probably should have made more because, taking off too soon. But it's something that I can replicate and I can live with. And I'm not going to make, irrational decisions at like the worst time. So find a strategy that works best for you and rinse and repeat. Just keep doing what works. And if it doesn't work, if it doesn't work, stop doing that. Do less of what isn't working. More of what's working, less of what isn't working. All right. Well, I appreciate it. I think this video has ran pretty long, but hopefully you guys have a great weekend. Here's my contact information, marksmithinvestors.com, 800-424-9033. Next week, we have our monthly Stay in Step webinar with Harold and Arnie. So there will, it's unlikely unless the market does something really drastic, that I'll have another video next Friday. So we will see everyone in a couple of weeks. Thank you. Bye-bye.